This Real Pro for Windows tutorial is going to be about Mortgage Credit Certificate. A Mortgage Credit Certificate, also known as MCC, entitles qualified homebuyers to reduce the amount of their federal income tax liability by an amount equal to a portion of the interest paid during the year on a home mortgage. This tax credit allows the borrower to qualify more easily for a loan by increasing the effective income of the buyer. The borrower can claim a tax credit equal to 20% of the interest paid during the year. Since the borrower's taxes are being reduced by the amount of the credit, this increases the take-home pay by the amount of the credit. The buyer or borrower takes the remaining 80% interest as a deduction. When underwriting the loan, a lender takes this into consideration, and the borrower is able to qualify for a larger loan than would otherwise be possible. We're going to go through an example here, and there's more information that is included with this posting and with this video. So we're going to click on pre-qualification. We want to do an MCC, and we want it to be 20%. because that's what's being allowed now. Say the car payment is $200 and they have a credit card payment of $100. Qualifying interest rate is 4. So we want to find out what sales price they can qualify for. So we're going to say it's a 90% loan to value and the borrower's income is $5,000 a month. Using 2836 as the front and back ratio guidelines, we see over here that the borrower qualifies for a sales price of $229,650. Their 10% down is $22,965. There's your payment, property insurance, property tax, mortgage insurance. We come back here and we see that the qualifying payment is $1399.74, with the actual front and back ratios of being 28 on the front and 34 on the back. Taking the tax credit into consideration, the qualifying payment becomes $1261.94, giving you a lower front and a lower back ratio, meaning that you can raise your sales price. To see that in print, we can print it in English or in Spanish. Let me change the size of my page here. And this is on a conventional loan. It can be used on FHA, VA, and conventional, including being combined with some of the other programs for down payment assistance. To qualify, a borrower must qualify and obtain a first mortgage from a participating lender, must be a first-time buyer. There's easy documentation. It can be FHA, VA, and conventional. There is family income and purchase price limits do apply. I have included a page on that with this as well. So we see their car payments, their income, sales price of $229,650. And based on these ratios down here at the bottom, you see that they would qualify for a little bit more house. And that's what the Mortgage Credit Certificate program is about. It's not about whether we like the program, but it is a program that is available to your clients. It might make the difference in a deal if you used it on even one client. If you have any questions, don't hesitate to give me a call. My name is Mary Ann, 909-539-7196. Of course, you want to run this by your lender to see whether or not they are a participating lender in this program. Again, 909-539-7196. Thank you.